per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small fee of $29.99 for you to join me on Telegram and follow my personal trades. But let's talk about the Nasdaq100, a significant movement during today's trading session, and it's kind of got me by shock because I'm not really sure how we've got this high. We've broken above the 50-day EMA. I do recognise that. I was looking for a negative movement where we got, where we bounced off that 50-day EMA and went traded back down towards at least the bottom of this trend line that we've been trading for. Trading in since the lows which we achieved on the 16th of June. So that would have taken us to around 11,750. But during today's trading session, we've seen a surge towards the upside, and I can't ignore the fact that we have now broken above the 50-day EMA. So where does that take us? Well, let's just quickly adjust this full fib. If we were to go and adjust that to the lows here on the 16th of June, well, right now we're kind of testing at 0.23 fib area. So do I want to go and buy this market? No, I don't really want to buy it yet because we are still testing at 0.23 Fibonacci retracement area. We could get rejected here. It could send us back below the 50-day EMA and back down towards new lows. The biggest problem I have here, guys, is why are we this high? Okay, last Friday we got a good retail sales figure. You could argue that some companies, although we've only just started earnings season, some companies have come out with, slightly better than expected earnings figures. Now this is encouraging, this is good, but if we look under the surface, Netflix, it wasn't good last night, guys. It really wasn't good. They still lost 1 million subscribers. I know it wasn't the 2 million that analysts were expecting, and going forward their outlook was very weak as well. They only expect to gain 1 million subscribers versus the initial 1.8 million expected. Tonight we hear from Tesla, and again, if we have any negative earnings figures from some of these big giants like Tesla, I do see Tesla as being a big stock that will heavily impact the Nasdaq100. Netflix less as much, so I do wanna, and I am excited to see what Tesla brings out, but I do worry for this market. I think that we could easily fall back below the 50-day EMA, and this could just end up being a massive fakie here. So I'm still bearish. I still believe we go and test 11,000. I know that seems crazy, but it's very important to understand that the average bear market lasts for 18 months. You could argue that this bear market has only been going on for 6 months. That's why I am so bearish. We still have winter to come. Winter is going to be extremely difficult. We've just heard from the European Union today that they're starting to ration natural gas. We've seen a spike here in the UK of natural gas up 25% in one day. Okay, so it shows you inflation's still here. I wouldn't be surprised if inflation increases. In fact, here in the UK, we've had a new 40-year high when it comes to inflation, up at 9.4%. And I wouldn't be surprised either if the next CPI reading in the US is higher than the previous month. I think investors have got a little bit overexcited here, and and are expecting inflation to calm down rapidly. I don't think so. I think that we are still in a lot of trouble. So I see this as a rally that you should be fading. I actually own some tech stocks. In fact, I'll go and show you right now because I've just seen it at the top of my screen. One of my prime positions, which is in Coinbase. I bought Coinbase. I'm going to go ahead and close that. I'm up $2,200. Close. This is what I am wanting to do. I'm wanting to close these trades. There you go. So that's $2,000 I've just profited on that trade. So I really did not want to be holding stocks for much longer here. So very happy that I've now gone ahead and closed that trade. So that's a nice $2,000 profit today during today's trading session, and that's what these rallies are all about. It's all about closing these fades here. Okay, we've seen a nice pop in the likes of Coinbase. Look at that, a lovely little pop towards. It's up around 17% during the trading session. The likes of Nvidia, for example. Sorry, wrong chart. Here's Nvidia. They're all having very nice strong runs. Here's AMD as well. But these are rallies that you want to be selling, because ultimately I think they do go and retest the lows, especially as we go into winter. So I do not think the lows are in. I think that these rallies should be faded, just like I just did then. I bought Coinbase, I've just sold it, I've made a few $1,000s profit, and now I'm looking for to buy these same stocks, these strong stocks, which I do believe will be trading at brand new all-time highs in the next 12 to 24 months. But just I think that there will be better buying opportunities here for the Nasdaq.
Million barrels per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is